There's been a lot of talk of where crypto assets fit in a portfolio. Now, we've been told to own a blended portfolio of uncorrelated assets. You want to own some stocks, some bonds, and some commodities. So where then would crypto fit in this portfolio? Well, to be sure, we're not entirely positive that crypto is an uncorrelated asset class. I don't think there's enough data to suggest that its price doesn't specifically rely on anything just yet. The asset class is so new. But then if you decide you want to own some crypto in the portfolio, here are some questions you might want to ask yourself. The first is, how much should you invest? Now, like we saw in a previous lecture, crypto is extremely risky. Not only do you have risk of capital loss, but you have risk of asset loss as well. Someone could hack into your mobile phone, steal your private keys, and your investment is totally wiped out. So consider that when you're moving into these markets. The second question is, how should you allocate these funds? Now, I think about how I can capitalize on growth in the space, and what that means is I want to own the majors, the crypto reserves, Bitcoin, Bitcoin Cash, Litecoin, and Ethereum, but I also want to blend them with a portfolio of altcoins that are moving up. So I look at that as like a 50-50 blend to capitalize on growth of the entire space in the future. When you're thinking about how much you should invest on any crypto trade, you should consider this. There's a famous book called Market Wizards, and in an interview with a trader named Tom Basow, he stated that he never risked more than 3% of his equity on any given trade. So think about that when you're moving to the crypto markets, where these assets can move by 10%, 20%, even 40% in a single day. Now, risk per trade strategies are a key determinant of whether you'll reach your financial objectives or ruin. And the one position strategy that I like to use is called the percent risk model. And this gives me an indication of how much equity I stand to lose if the trade goes against me. So if you buy Bitcoin at, let's say, $10,000 and you have a $9,000 stop, I'll make sure that I only invest in as much that I'll know how much percent of my equity I'll lose if I get stopped out of the trade. So that concludes our section on money management. Now you should be able to apply proper techniques to an extremely volatile crypto market, and you should also be able to demonstrate proper risk per trade strategies.